Should we go?
Hi, my name's Danny Fleming.
And I'm Marcus Collins from MA Properties, and we are here this evening to look at the 2020 Arlington Market Review.
And we're smiling because just as we were going live, our dog is at the top of the stairs and barking and saying,
at us.
"Let me come and see you."
So much for working from home. Right? There you go, there he is up there as well. Thank you.
Anyway, let's get on to what we're planning on doing this evening. First off, smart moves are made here. We think it's really important because it's easy to get information and data today, much harder to make sense of it and use it to your advantage. And this is why we take the time to explain why we're so serious about learning every data point in detail. And we study our markets obsessively, as you're about to
As you're
find
about to see with these bits of paper we have here.
And we think it's so important to get information out there, because that's when sellers and buyers start understanding what's going on in the market. So our agenda this evening is we're going to cover single family homes, then condominiums, then new construction, then rentals. Then we'll do a bit of a summary and some predictions on where we're going in 2021. And also what we're going to do is we'll take you, just before going to the end there at predictions, we'll also show you how you can find that same information in about 50 odd towns around the area, if it's not just Arlington you're looking at. Now, first off, our 2020 market review. We put this in mailboxes every year. It's going to look different this year. It's going to be a little bit different. I don't know if you recall, we have the blue stripe across angled. You should have bought it with you, yes. But now it's going with our new color scheme and logo. So, Marcus, do you want to take us off?
Single family homes. So you'll have to excuse me while I look down because I do need some notes to go through this. But let me start the ball rolling looking at single family homes and take you through lots and lots of graphs. So the way this evening is going to play out, we have, 10, 15, 20 graphs. I don't know. I didn't add them up actually.
I put them in.
There you go.
I didn't count them.
No, I didn't. All of these, as Danny said, are going to be in the market review. So what I thought I would do,
which will be hitting mailboxes in
pressure
Arlington.
Oh, here we go. Pressure.
Probably
already.
late January. It's the 8th, 19th. Yeah, that's 11 days.
Late January.
February. So keep a lookout for it. And if you don't receive one, let us know. USPS should deliver one to every mailbox in Arlington, but sometimes there may be glitches, I guess. Be positive. There's not going to be any glitches at all. You're going to get one in the mail.
Can we do the inventory?
Yeah, let's go.
Yeah, let's go. All right, so the way this is going to play out, there's lots of graphs. No notes. I'm just going to talk and explain what you're seeing on the screen in front of you. So, first off is the inventory most of these graphs are for the last decade. The market review looks back 10 years, so most of them are for the last decade. One or two a little bit different, but most for the last decade. So here what you see is the inventory level for the last decade. And what the inventory level is how many homes were available to buy on the first of the month. The number itself doesn't really mean anything. It's really the trend that we're looking at here. So we're looking at over 10, in some cases, more. So if I can try and use the mouse, there it is. What you see in 2011 and 2012 is the end of the big recession, if you will, in the housing.
Meltdown.
Right, that's what you're beginning to see. 2012 is when it began to take effect in Arlington. If you look at other towns, almost all other towns actually, certainly towns in the vicinity of Arlington, it was 2013 that it kicked in. And what happened in 2012 is that the buyers who were sat on the fence wondering if the housing downturn had kind of worked itself out of the system, all of a sudden came back into the market. In Arlington, it was somewhat gradual, it took 2 years. Most towns, it took 1 year. They almost came in just like that, just like bang, they were in the market. Arlington started 12 months earlier, but by 2013 you can see we had very low levels of inventory in comparison to what we saw after the crash. As you get into 2018, specifically the end of 2018 and 2019, you can see that those inventory levels increased. So what was happening, if you think back, gosh, 2 years now, 2.5 years, there was lots of discussion about an economic downturn. Came in really the latter part of 2018 and certainly was on everybody's mind throughout 2019 and to some extent the early part of 2020 when it was overtaken by COVID. What that caused to happen is more sellers to come into the market thinking perhaps the peak of the market, or at least when house price appreciation had been rising quite rapidly in the town, was coming to an end. Maybe now's a good time to put my home on the market. Conversely, from the buyer's perspective, they were thinking, maybe I should wait 6 months. Perhaps house prices are going to level off, maybe even decline. Perhaps it's going to be less competitive. And so what you saw in the end of 18, in the fall market of 18, throughout 2019, was an increase in inventory. Now, what happened in 2020? Well, as you can see there in this graph, it really that softness, if you will, that excess inventory to some extent, kind of carried on, certainly in the initial part of 2020. And I have some data further on that will explain it kind of month by month. What you're seeing in this peak here, which is in the fall market, is the condo market, more condominiums coming on the market. We have a lot more to talk about that, in the condo section, in the next section in condos.
And I think it's worth talking a little bit about the impact that it was having in late 2018 and 2019 with the buyers. Even if they were buying and making offers on homes, they were a little bit more reluctant to go crazy on homes. Whereas in prior years, they felt appreciation was just heading up and heading up and heading up. And so they were a little bit more comfortable to make higher offers on homes when they were competing for them. Whereas in those periods of time, they were just a little bit more reluctant, maybe not going crazy with those. So we also had a reduction in the sale price to list price ratio, which Marcus will show us a little bit further along as well.
So that's the inventory levels. Let's next look at home sales. So home sales have been relatively static in Arlington. I think it's fair to say if there was more inventory, a lot more inventory, we'd see more home sales. It is to some extent, on an aggregate level, somewhat supply constrained. It's a very popular town. As you'll see, as Danny mentioned, the sale price to list price ratio in Arlington is over 100%. It's less in almost all other towns. But the number of home sales is relatively static. And what's important to note, of course, given the turmoil of 2020, those numbers held up very well in comparison to what we saw in 2018 and previously. So on the whole, the home sales, and I think on a kind of aggregate level, Arlington held up very well, given the turmoil in the housing market and in the market in general, in the economy in general. Arlington held up very well, but we've had relatively static home sales in the town, say for the last decade or more. Average days on the market, as well as the ratio of the sale price to list price ratio, are the two metrics that we follow to get a strength of the market. As you can see with this one, it dropped from over 50 days in the downturn. It dropped down to the low 20s, and it's really continued at that same level, plus or minus 1 or 2 days, all the way through to 2020. In fact, 2020 was just 2 days less than it was in the other years. So again, another indication that the Arlington market held up very well. Sale price to list price ratio, again, single family this is, dropped a little bit in 2019 because of that kind of excess supply, but somewhat reticent buyers to some extent. I don't want to overplay any of this, but that little bit of softness from the buyers, few too many homes coming on the market with listings, dropped that ratio down to 102, and it rose a little bit, 102.5 I think this year, something like that. 2.4 something. So about the same level. Again, another indication that the conditions we saw latter part of 18 and 19 continued into 2020, even though it was a very, a lot of turmoil in the market.
And it's fair to say that even though there was talk about an economic downturn, it hadn't happened, but it's that perception that there's an economic downturn coming that causes those sort of those questions in buyers.
Yeah, it doesn't have to be real. It
Yeah.
can be a perception. If people try to jump the market, if you like, try to be ahead of the market, of course. And the perception is enough to kind of force, and it may only have been another 20, 30 buyers and sellers in the market. It's not that big a number. You can see the changes are not dramatic here. They're just 1 or 2 percentage points. That's really all it is. So the all-important price, I guess, everybody cares about price. What is the average sale price in Arlington? So interestingly, if you look at the period 2013 through to really about 18, you can see year on year, we were getting about 6% price appreciation year on year, every year. It slowed in 19 and that continued in 2020. In fact, we got 2.5% in 2019 over 2018 and 3% 2020 over 2019. So price appreciation has begun to slow. I say because of that perception of the economy and then because of COVID, we've seen a relatively slowing down, if you will, in terms of that price appreciation. We see the same thing in the median price as well. As you can see, the median price at 870, the average price, excuse me if I go back, 974. So 947, a little bit higher for the average than the median, shows that we're beginning to get a little bit, we'll show the price distribution in a minute, a little bit of a long tail. We are beginning to see more expensive homes coming on. The sweet spot is still very much, in that sort of 700, 800, 900 price point, but we are beginning to see some more expensive homes coming into Arlington, and that's why the average and the median begin to diverge in the way that they do. So, median price, say 821 last year, 870 this year for single family. Thought it would be useful to show a graph that I don't normally show in these things, and that's the cumulative sales. And let me explain a little about what this graph is to avoid any confusion. So what I've done here, and I've done it for condominiums as well, is I've looked at homes that were listed in 2020. So not carryover from 2019, that were listed in 2020, and I've mapped when they went under agreement. And I did that because there's about on average, a 6 weeks delay between going under agreement and closing, which is when we get the close date. So I've mapped under agreements. So to get out, because often they're very close by and there's not that kind of the lag in there. Now, what you can see is COVID kicking in. It kicked in the single family market around about the second half towards the end of March. You can see the graph was kind of relatively steep in this period. We had a mild winter. Maybe we will this year as well, we'll see. And then, we hope so. And then it begins to slow down, that curve flattens until the end of May. Come the end of May, it begins to rise again. And as you can see, the blue, I should say, the blue that's behind here is 2020, and the kind of orange color is 2019. Pink. It's orange, I think, but okay.
Pink.
Okay. Actually, it's coral.
Okay,
There you go. It's coral. There
okay.
we go. We've rebranded this year, and one of the colours is coral.
Pink.
Coral. But as you can see, 2020 lagged behind 2019 all the way through until really November. So it was playing catch up throughout the year. Once we got to the end, there was almost no difference between the number of homes that went under agreement in 2019 versus 2020. That's the reason, for example, that those numbers differ from the home sales. Home sales are closing. This is under agreement dates if somebody's looking at the details. But single family, really lagged behind, and it really only caught up as the year progressed, kind of making up for that period in March, April, May timeframe, when we had that flattening of the curve, because not that many homes came on the market. It was quite difficult to list and therefore quite difficult to sell homes. So that's what's kind of going on with that graph there. And I have more to, it's more interesting when they diverge, and we'll see that with the condominium market when we actually get to it. Some data, some raw numbers. I mean, these are really more meaningful when you look at them in the market review, and you can kind of poke around. I take the data and I break it into some pretty straightforward price brackets. You know what? Go on.
I was going to say, what's really interesting with this piece of data, and as Marcus will talk about, is you can really identify where the sweet spot in Arlington is. You've got the lowest average days on the market is between the $750,000 and $1 million price range, and yet there's a huge number of homes sold in that price range, and it's also got the highest average sale price to list price ratio. I mean, this is $750,000 to $1 million is what the buyers are looking for,
Yeah,
and
maybe even a little higher as well. Actually, there were a lot more in that range, but then it kind of carries on a little bit too. Yep.
Sorry, I just realised I just sort of. What else do you have to talk about that one?
On this one, no, I do two things with this data. The first thing I do is, if you think about the average sale price, if the distribution shifts from one year to the next, so for example, usually what happens is you get more expensive homes. You see it in Arlington now. This is, I think last year there was maybe one in that over 2 million price range, if they even that. But we're beginning to see more expensive homes. So the distribution is beginning to shift. But if you look at the rate of change of the average living area for each of these price brackets, it's kind of a sanity check, if you will, in terms of the average sale price appreciation. So the rate of change of living area, it's a kind of crude metric, but if it's out of step with the rate of change of the average sale price, then something's gone array, and it's usually because of the price distribution that's kicking in. Not so much in Arlington. Other towns, this is definitely the case. At Lexington, Winchester, for example, where we are getting more expensive homes coming on in a larger number than we are in Arlington. But you can use the rate of change of the average living area to kind of sanity check the average sale price, the rate of change of the average sale price, therefore price appreciation. No, I mean, what you said, is right in terms of it does allow you to kind of break it out piece by piece, 104% all the way down to 96% in the over 2 million. More to say about new construction, because you can see the two homes there were over that price point when new construction. In fact, 9 out of 14 of the 1.5 to 2 were new construction too, with that relatively low sale price to price ratio there. So in comparison to the rest
relatively low.
Yeah, in comparison to everything else. But overall, we saw, if you compare these numbers to 2019, we saw very little change in those numbers. You could have drawn the same conclusion with the
sweet spot.
Yeah, last year as you did. In 2019 that you were in 2020. So roughly the same. So I think if I kind of characterize the single family, lots of turmoil in the world for that matter, let alone in localized in Arlington here. But overall, the single family market kind of carried on. It was almost as if nothing had happened. You could almost have excluded COVID from what I just talked about, and probably got the same graph and come to the same conclusion. So that's interesting that huge turmoil really didn't affect the single family home market that much.
Yeah.
Condominiums?
Yeah.
All right,
Go
condominiums. Okay. Here, roughly the same set of graphs as we saw previously, this time say for condos. It does vary. This is the condo sales. They do vary. As you can see, they're not quite all over the place, but there's a lot of variability year to year. And this year we saw a 15% increase in the number of condos selling. What's quite interesting is that we got 17% more condo listings. More of that in a minute, and we kind of broke it out a little bit to get a sense of what was going on in the condo market.
Because we saw it changing quarter after quarter after quarter. Well,
yeah, no,
the
you
latter
did.
part.
Yeah,
the latter part of the year was quite dramatic.
And you'll see that very much in the data as we kind of go through. But the variability has always been there in the condominium market, so no big surprise in terms of that number selling anyway. Average sale price, same with the median. The average sale price better than the single family market. Overall, we got a 5.5% rise, 18 to 19, and then 19 to 20 was about 5.6%. So about the same. Remembering it's about 3% for single family. So overall, condos held up very well. Mm-hmm. It's interesting, why that is, because to kind of not quite jump the gun, and if you're going to talk about this, jump in. You got two effects with the condo market, and what we saw in the condo market was a little bit of a reluctance for buyers to move into condominiums for a couple of reasons. First of all, they're in general smaller than single families, but also there's a lot of shared space, and given COVID, that had an impact. Now that's kind of on the one side of it. On the other side, on the negative, if you will, on the positive, house prices are much cheaper. Here we are at 685, the average. I think the median is 665. Median for single family at 870. So a pretty big difference there. So, you know, we've got that kind of negative connotations of condominiums kicking in. On the other hand, and this is why I think the condo market held up very well overall, was we've got lower prices. So you've got those two things kind of not quite competing with another, but the kind of, competing with one another, I guess.
Well, we even saw it with buyers that we work with, that, you know, if they were looking at a condo, they understood that they were going to be going into a shared space. But it made a difference if they had their own separate front door and if they had their own sort of separate backyard, you know, that they didn't actually have to cross paths with someone else. Those homes sold a lot quicker, a lot more readily than the ones where, you know, you walk into the front door and then there's two doors to the condo. People were just, there was so much going on in the beginning of this year with how do you catch COVID? Is it the surfaces that you touch? Those sorts of things. So people were just not knowing how this happened. So they tended to be moving out of the centre of Boston, Cambridge, Somerville areas because they were stepping on each other's feet. There was a little bit more reluctance to actually come out and step on each other's feet, which is quite interesting. But then as the year progressed, and a lot more knowledge became how this happened, there was a lot more, the comfort level increased.
I think this is also one reason why the single family was pretty static. There was almost no difference in terms of, you know, 2019 versus 2020. If you look at other towns, there was a definite desire, increased desire really, to have a bigger house. You know, people are working from home, or parents are working from home. So two perhaps working from home, they needed more office space, children would be in remote teaching, remote learning. And so there was, you know, this new push for a somewhat larger home. Arlington's always had relatively small homes in comparison to, for example, Winchester, Belmont and Lexington. That made it an ideal destination for first-time home buyers. First jumping off point from the rentals in Somerville and Cambridge into Arlington. That's really what drove the Arlington market and continues to drive it. Why we saw some quite, much larger increases in home sales in, for example, Lexington, was the homes in Lexington in general are larger and therefore it became more desirable. So
not more desirable, it's where
people's preferences
changed. And people that did have 4 adults living in the home, in a 1,500 square foot home, and there were 4 adults all needing to work, they needed to find a larger place. Whereas I think from the Arlington perspective, you're in a sweet spot there. I mean, it's in demand. Typically, you know, a lot of the profile of the owners there are a couple with a couple of young children. You didn't need to move so much. You know, the young families weren't having those same problems that other people were having in
and there was still the desire, and it really is a desire to move out of a rental into a single family. That's what drove the market in Arlington previously, and that's what continues to drive it. And actually, you know, looking forward, of course, that's what will drive it in 2021 and on. So a quick look at, so this is median price, so say 665 versus 870 for the median price condo versus single family. As you look at sell price to list price ratio, you can see a decline. Now that 19 decline caused, remember what we've talked about with the single family market, really that economic uncertainty beginning to impact the market a little bit. And then that number reduced somewhat more in 2020. But we saw, as we brought homes on the market, that ratio changed as the year went on. And so this is the aggregate for the last decade. But if we look at it month by month, you can see some interesting, that ratio month by month. you can see what happened in the market. Remember what I said previously, that we got a 17% rise in the number of listings, but only a 15% rise in the number of sales. One second. That kicked in. Danny's aching to go.
No, I was just going to say it's going to be easier to see in the next slide.
It will. But what? And that predominantly came in in the second half of the year. So now, remembering, more listings, some more buys, but not quite as many, but an increase in those listings in the second half of the year, and you kind of overlay that with what you see here, and you can see some of the weakness that we saw in the condo market in the second half of the year.
Well, we bought on a few condos in Arlington in the last part of 2020, and we were seeing a change week by week, starting the beginning of September, I believe. We bought the first one on, and then some progressive after that, and it really was quite a difference week to week.
Mm-hmm.
As more homes came on the market, there was less demand, and this next.
Yeah, so if we jump forward, we'll jump back and forth between these. You can kind of see the relationship between these. So back to that cumulative. Blue is 2020. Pink, coral actually, is pink is 2019. As you can see, what's interesting, just lay the framework here. There was almost no impact of COVID until we got to May, which is interesting. Single family, not just in Arlington. If you look at other towns as well, you could see it's that curve relatively steep at the beginning of the year with a mild winter, and then it flattened off.
Yeah.
It didn't happen with the condo market. It carried on, gusto, kept going and going and going. But it did kick in that May timeframe. That's when we got that 2020 condo sales lower than we would have expected with 2019. So we're juxtapositioning the two here. It crossed over though by that July timeframe. That's when the number of condominiums selling or going under agreement here exceeded what we saw in 2019. So that July, August, September timeframe, if I kind of jump back, is when we began to see that sell price to list price ratio begin to decline.
Because don't forget, when a home goes under agreement, typically it's 6 to 8 weeks after it goes under agreement to when it closes, which this data that's showing here for December,
I'm going to stop you.
No, no, you didn't. You pulled it differently this time. Okay.
Yep, I did.
Well, just scrap everything that I just said then. And
This is I mapped under agreements, not closing.
So you actually grabbed them. Okay.
No, so this is the sell price to list price ratio mapped against the day it went under agreement,
So
not the day it closed.
How did you get the December stuff? Anyway, let's go. I'm curious about that. Keep going. I'll quiz you later.
Why wouldn't I know that, right? Why wouldn't I know that?
I want to know.
Right. There are less for December than
okay.
Right? Because I don't know when they went. What Danny's saying is, if it went under agreement in December, maybe it hasn't closed yet.
Yeah,
but actually some have. So there you go. There you go.
Sorry.
I do this for a living. No, I don't. I do this for a living.
He hates it when I ask questions.
No, I know the answer. I'm just saying.
Anyway,
so what you can see here is a direct correlation with that sell price to list price ratio declining with the number of sales increasing, therefore the number of listings increasing. Yeah. So what you're not seeing in this data here is what the excess listings were. And they were much, much higher moving in this period here. So that's what's going on with the condo market. So at least that's what's going on in the second half of the year with the condo market. An excess of inventory, unfortunately, kicked in, and it didn't uniformly spread across the rest of the whole of the year. It actually kicked in that second half of the year, which is why we saw some of those issues. And certainly we saw those. I'm not sure everybody did. There's some anomalies in some of the data where actually homes that actually sold in this time frame actually went for much higher than realistically they should have. But that's what you see.
And when you look at some of that specific data, you find agents who are working as buyer's agents that don't necessarily do much business in Arlington and weren't really in tune with what was happening in the town. And
right. Yeah, and you can see some of that in some outliers. Certainly, as you got into that second half of the year, there was some like, whoa, hold on a minute.
Someone paid
There
for
was,
that, for
yeah,
that.
there was a lot going up. There was a lot of inventory on the market. Homes were sitting for a while. You know, that one doesn't make any sense.
Yeah.
Anyway, so here's the individual data. Really, the average list price consistent with what we saw in 2019, and then if you analyze the average living area, the rate of change of the living area, it kind of backs up that about a 5% rise we've seen 19 to 20 with the condominium prices.
It's actually interesting when you look at this. The average days on the market, the lowest average days on the market is the 1 to 1.5 million range.
Yeah, only 18 homes, of course, but yes, that's true. Yep.
Yeah.
Yep.
Yeah. Sorry, I just looked at that.
Yep.
And thought, even though I put this into
And
here, I
I
was looking at it.
have no
thinking,
idea what the I don't have the data for single family but in front of me. So, quick look at new construction.
and I will talk later.
It's killing us. You can't talk.
Keep going, dear.
New construction.
Yeah.
So it's kind of interesting. 2011, 2012, 2013, there was almost no new construction in Arlington. House prices were relatively low, and there was no desire for new construction, but it kind of kicked in that 14 through 16, and it's continued, albeit the peak in 2016 was still the peak, and it's been declining ever since.
That's probably most likely because teardowns, the whole thing with a teardown is when you've got demand in a town for certain price ranges, a home buyer who wants to live in the home will always pay more than a builder. Always. So once the demand started heating up again, hopefully, I think a lot of sellers realised that they could get more money selling the home on the open market rather than selling to a builder.
That's true. I mean, it's interesting. If you look at the sales price distribution for new construction, here what I do is I map how many new construction in each of these price bands from up to 1 million all the way to 2 to 2.5, and actually 2.5 plus, but we're not there yet with Arlington. You can see that there's a shift going on here. Back in 2018, the majority of new construction homes were in that 1 to 1.5 level, and that was really it. There was an outlier here and there, but that was about it. But now what we begin to see as we kind of fast forward to 2020, that yes, there are less new construction homes, but that 1.5 to 2 is beginning to kick in.
Do you want to explain how builders determine what they're willing to pay for a lot to tear it down?
Oh, sure. So we talk in terms of thirds, actually. So that if you think about when a builder looks at a so-called off-market teardown, they're not interested in the house, of course, they're interested in the land. And the way they look at it is, in general, a third for acquisition, a third for build, and then a third profit. Now, interestingly, so that's rule of thirds, if you will, but interesting what we've seen in general. If you look at it, and you can map different towns, and you roughly get those numbers. What we've seen, certainly in Arlington and other towns, other popular towns too, the builders are having to pay more, and therefore their profit is sinking. And I looked at the average teardown price in 17 through 20, and in 2017 it was 500,000. In 2020 it was 600,000. So the builders are being forced to pay more money. That's about a 20% rise.
And you should say thirds. It's how much can a builder sell that new construction for. So that governs how much they're willing to pay to buy that teardown. And as the home buyers are spending more and more and more for a home, the builders are not necessarily willing to pay that sort of money for those homes to tear them down, because they're limited by how much they can sell the resultant home for.
Right, and so given that the majority of new construction now is in that 1.5 to 2, that's where that 600 comes from. 3 6s are 18, about 1.8 million, give or take. That's why we've seen that shift to a higher price point for the new construction is because the builders are having now to compete, exactly as you were saying before, Danny. They're having to compete with home buyers, and there are a lot of home buyers out there. And, you know, specifically in those lower price points, there are a lot of first-time home buyers out there. And so what's happening is the developers are finding they have to compete with those first-time home buyers. And in general, if you think about that ratio, that's been well over 100%, gosh, for the last 3, 4, 5 years now. And so buyers are willing to compete to buy relatively affordable homes, and the builders are not willing to do that, or are unwilling to do that. But that's the reason why we've seen off-market teardown appreciation, and it will continue, is that the home buyers are willing to pay more. What will cap it will be how expensive the builders can sell the new construction homes for.
And it's true to say that thirds ratio that Marcus was talking about in Arlington, we're seeing the ratio that builders are willing to spend is probably around the 42%,
Yep.
43% of that final sales price. They're having to up the...
They're having to. They're not willing.
Yeah.
They're having to.
Yeah, they're having to.
Yeah.
So,
Yeah.
so-
They don't
which
want to
is a
do
good
that.
thing,
They don't want to
'cause
do that, but
it's a good thing because, I mean, put it this way, it does change the characteristics of a town, having lots and lots of teardowns and building the big homes. And it's there are so many buyers out there at those lower price points, and Arlington is a great location for young families with young children and such a community feel that, you know, it would be nice for the town to I don't want to sort of get into a soapbox type of thing, because sorry.
good idea.
Yeah. So
Actually,
let's move it on.
it's a relatively small part of the market. I mean, 22 new construction versus 242 single family. So in comparison to other towns, it's a relatively low number. But it's gated to some extent by the price at which a home can actually be sold. And that's to say that predominantly in the 1.5 to 2 million price.
And sellers will get more money for their home if they sell it to a buyer.
Yep.
They will get more money for their home if they sell it to a home buyer. So that to me is where it's so important to get the message out, is don't sell your home to a builder, but you'll get more money selling it to a home buyer. Keep going. I need to get off my soapbox.
You do. We'll talk about something else.
That's a good idea.
What's quite interesting is sell price to list price ratio for new construction lags single family homes. The only explanation really for this is that the pricing strategy of new construction is wrong. It's too high. It really is too high. Builders in general, you know, bring homes on the market too expensive. And as you can see here, the average of 99%, it's 101, 102, almost 102% for single family homes. And so, you know, pricing strategy is the issue here. And when you look at that ratio, that those new construction homes in general are overpriced in compared to what the market is willing to bear. So a much lower number.
Although when you talk about that, you know, 99%, 97, 99, it's still not dramatically low. But yes, it's not doing.
It is when you compare to 105% that
yes.
we get in Arlington.
Absolutely.
Yeah. What Danny's implying here is if you compare this to other towns, it's still a big number. Actually, yeah, that's correct. But if you compare it to Arlington, actually, it's not. Yeah. It's actually not a very, very good number. We've had over 100% almost for the last decade here in Arlington, and upwards of 105%, 104% in 2018, and so on. So it is a much lower number. 3-4% is a big difference, you know, on a $1.5, $2 million home. So poor pricing strategy. Here's the numbers, you know, in terms of, as you can see it there, you know, breaking it out a little bit between 1.1 to 1.5, 1.5 to 2, and then 2 to 2.5. You can kind of get a sense of what those numbers are. So,
rentals.
So rentals are kind of interesting. What we saw in the first half of the year, the rental market in many towns, specifically Cambridge and Boston, Somerville, really, I mean, it just stopped basically. It literally did stop. We saw landlords having to waive security deposits, certainly waive the fees. There was a lot of pressure on landlords to reduce rentals because there were just far too many rentals in the market than the market could bear in the first half of the year. If you kind of look at Arlington, so that was kind of predominantly in the Boston, Cambridge, Somerville markets. Look at Arlington when we kind of bring it out for the whole year. We actually got a 15% increase in the number of home rentals in Arlington than we saw in 2019. You can see 17, 18, 19 has been pretty static. 290, 280, 300 maybe, all the way up to 350 basically this year. I think some of that is a consequence, we talked before about the renewed, or at least the increased desire, if that's the right way to put it, for a somewhat larger home. I don't need to be in central Boston. I'm not commuting anymore. Why don't I move out of my 700 square foot rental in Boston and move to a 12, 13, 1400 square foot rental in Arlington for about the same price? And so that is what's driven that slight increase in home rentals, say about 15% more. If you look at the market in general, comparing it to Boston and so on, Cambridge saw about a 2% reduction in the number of rentals in 2020. Somerville about a 12% reduction over 2019 over 2020. And actually Boston, poor in the first half of the year, about negative 10%, about 10% less rentals are being rented in the first half of the year. But overall, when you bring in the rest of the year, it was up about 9%. So Boston on the whole did actually saw an increase, but first half of the year was very, very poor. So increased number of rentals, I think, driven from the desire for a somewhat larger home. And if you're renting, then, and I don't need to be in central Boston, then why don't I just move that little bit further out? I don't want to go too far out, but that little bit further out here into Arlington. Even though the number of rentals increased, rental returns been pretty static for a long time. It really has been static for a long time. Over the last 5 years, we've seen on aggregate, about an 8% rise in rentals. Really not very much.
Over the 5 years?
Over the 5 years, yeah, over the 5. So, 1 point something percent a year. And you can kind of see it in the data here. In fact, we got a 3% reduction in the rental return in 2020 versus 2019. So, not great. I mean, when you think about single-family home appreciation, condominium appreciation, upwards of 3 to 5% year on year. Rental returns, really not that much more. So any landlords who have properties, there really isn't much going on in terms of the rental market. It's the same as the rental you bring in. Rental return this year is roughly the same as what you had last year. The growth is in the house price appreciation, and that slowed somewhat over the last 2 or 3 years, say from 5% previously to about 3% over the last few years. So most of the rentals, no surprise, looks roughly the same because they're pretty aggregate chunks here, roughly the same as what we saw in 2019. The majority are in the 2000s. I think if you looked at this a little closer, perhaps broke that down into 500 square foot increments, you might see a shift 2019 to 2020 to a slightly larger home. But bear in mind that Arlington really doesn't have much larger homes. You wouldn't see very much in it. But the sweet spot still in that kind of $2,000 price range, where we had upwards of 170. That's kind of the sweet spot there. So that's the rental market, really.
Summary.
You going to talk now?
No. I'm
really? Danny, I thought you were going to talk now.
Because he always critiques what I
No,
say
I don't.
afterwards. I'm going to talk in a little bit.
Were you?
Yeah.
Okay.
Of course I am.
I didn't know what my knock was about.
Wait and see.
Wait and see. Okay, we'll wait and see. As I mentioned before, we look at sales price distribution because we're interested to see if there's a shift that would potentially begin to skew the average, and to some extent the median, of course, house price, because that's really what we use to look at house price appreciation year on year, rate of change of house prices. So distribution, if the distribution shifts, it can kind of shift that average, but it's just a shift in the air. It's just the skew that's causing that appreciation. It's not real house price appreciation. This is 2019 versus 2020. You can see that kind of middle. I can't really see if I'm looking at another screen that's quite small. It is. Why don't you do it? Go for it. 8 and 9 is where we've seen the largest. I'm looking at where we've seen the largest rise. Seen a drop in the 700s, but an increase in the 800s and the 900s.
It's just moving upwards. I mean, when you look at it, the 1 to 1.5 million is pretty similar. You're seeing a tiny bit of an increase in the 1.5 to 2s, but between the 2 years, the dramatic increase is from where you look at how many homes sold in the 700K price range to how many homes sold in the 800K price range, and you look at that in 2020, and in 2020, the 800K price range exceeds what was being sold in 700. So when we go back to the data for single family homes, for instance, and we said the sweet spot was in the $750 to $1 million price range, based on the data, the sale price to list price ratio, the average days on the market, and the number of homes sold, you can see that $750 to $1 million price range is key in Arlington at the moment, and it's showing us in the sales distribution.
What these graphs also show us, just looking at 2020, remember what we said about new construction. The highest price new construction, we've had maybe over 2 million. Majority in that 1.5, let's look at 1.5 to 2. Take 2 million, divide by 2, you're upwards of about 700, just a little bit less. And so...
What did you say with that? You divide it by 2?
3.
Oh, 3, you said divided by 2. Okay. All right. That's why I'm sort of, what?
3. So $2 million, if you think about that range there, divided by 3, excuse me, sorry if I said 2, I meant 3, brings you back to, that 600 price range.
6 to 7.
Yeah, house price appreciation in Arlington's been quite rapid over the last few years, and it's basically priced the market out of the developers. The developers, the more expensive homes, there just aren't enough to warrant builders paying any more than where they are right now. So this is the gating factor for new construction in the town. It really is that driven, as we said previously, by first-time home buyers predominantly, maybe downsizers too, we shouldn't exclude them, looking to move from a Lexington or a Winchester, Belmont, into Arlington, into a somewhat smaller home. So a lot of desire to be in the town, and that's pushed house price appreciation upwards, as you say, now the sweet spot really into that 800,000 price point. That's too expensive for the builders. Yep. And so the town, and that will continue, as given that the town weathered COVID very well. Clearly 2021 is going to be a better year than 2020. How can it be worse? So we're going to see that continuing apace. And so the town very much has just basically priced the developers out of the market, and that's why new construction is such a small portion of the overall market in general. So you can see that in the data too. But the biggest jump is really in that 7s. It was always high,
in
8s. To some extent, the 8s is where it is there. So one other piece of kind of useful information. It was kind of a surprise to me, this one, when I mapped this one out. Mortgage interest rates. What is the impact really of COVID and of the economic downturn that comes with that in my opinion has not fully been felt the way it should be. Mortgage interest rates, the predictions for what they're worth are that it will remain flat all the way through 2021.
And this is not our predictions. This is
I wish I could predict this.
There's 4.
Correct. Yes, it looks at the Fannie, whatever the 4 are. Yes, it's an aggregate of
we know who they are. We just can't remember at the moment.
I can't. It's an aggregate of 4 major forecasting organizations to see where it's going to be. So we see, what's interesting is it's going to remain low. But what surprised me was, the average data in 2018 was 4.5%. We've seen a drastic or dramatic drop down to Q1 2021 here, all the way from 4.5 to 3. That's a big drop. This is one reason why. For those buyers in the market who were wondering why there were delays in closing, it's because an awful lot of existing home owners home buyers, homeowners, decided to refi.
Yeah.
You know, I was currently at 4.5. Now I can get it for 3, maybe even a little bit lower with an adjustable rate mortgage. Great time to refi. And so we saw a lot of refis in the market, as well as, you know, the normal amount of buyers. And what we did see in 2020 was that many closings were delayed because the banks just couldn't keep up.
They were overwhelmed.
And it's the refi market in conjunction with the home buying market that really caused that. Yeah. That's what was going on. So that you can see that in the data. I was surprised to see it came from 4.5 all the way down to 3. That seems like it.
This is a key one. This next piece of information is very key. Very key.
Go for it then.
Oh.
There we go.
So we talk about the average sale price to list price ratio. Single families was 102. 102. For condos, it was 101. Implying that most homes sell for over asking price. So if you were bringing your home on the market, you'd be thinking, I'm going to get over asking price. No problems. I'm going to get over asking price. Whereas when you look at the sale price to list price ratio distribution, if you have a look, 35% of the homes that came on the market last year in 2020 sold for less than the asking price. So it's not just a given. Everything has to be right to be one of those 65%. I look at this graph and I look at that poor home that sold for 68% of its asking price.
I don't know what happened with that one.
No, and yet there was another one that sold for 125. If you're planning on selling, you want to be one of these people in the 65% who sell over asking price. And there's reasons how you can get there. Now, sure, we're doing this masterclass this evening that's on the market review, what happened in 2020. We also do monthly masterclasses, which are talking about the different components you need to sell for over asking price, to maximize your sale price. So it's really key. Don't just assume that every home that comes on the market in Arlington is going to sell for over the asking price. For instance, our son and daughter-in-law are staying with us at the moment, and they're looking to buy in Arlington, and we were starting to talk to them about stats and everything. And they said, oh, well, we need to really not worry about Arlington then because, you know, competition, you know, all of this type of thing, it's probably going to price us out of the price range. And then we sort of explained, well, no, look, 35% of the homes sell for under asking price. It's not just every home sells for over asking. Some of them don't. And the thing is to buy smart and to sell smart. Smart moves made here. Okay. So what we want to do now, I just want to briefly go and show you, we have information on our website for about 50 plus towns around the area. And what I want to do is show you where, if you've got any interest in any other town, maybe you own a home somewhere else or you're thinking about buying in another town, not specifically Arlington, then here's where you can go and find this information. Can you click us over? Mm-hmm. Okay, so here's our website. It's maproperties.com. I'm going to scroll down to a couple of things. First off, I'm going to go into communities and then I'm going to go into real estate statistics. In communities, what you can do is if we go into other towns, I'm going to show you the towns in the greater Boston area that we have stats for. You can find out what's going on in these towns, in every single one of these pink towns, if you like. It's all over. Typically when we sell a home in a town or when we list a home in a town, we pull the stats because our philosophy is that our sellers and our buyers, they deserve to know what's happening with the largest investment that they own. So we pull the stats and we keep them going. So
we should add, we pull the stats, but then every month, I do it on a monthly basis, I update those stats. What you saw with the market review was kind of a snapshot of the last decade, but the stats that Danny will show you now are updated usually on the first of the month. So on a monthly basis, I will update these stats.
We have this information for everywhere. So if we go back to the main page and you scroll down again to real estate statistics. So what we have here is each of these icons will show you the sort of data that we have that we took you through. And there's more that we haven't shown you. Inventory levels, I'll go and show you some of these in a sec, but absorption rates, sales price distribution.
We just saw that, for example, for Arlington,
Yep.
2019 versus 18.
Yeah. Price per square foot bands, sold to list price ratios. And this shows you sort of how it typically goes for each month of each of the year and what the sale price to list price ratio is. Yearly total sales, median home prices, average home price trends, average home prices, town market activity. If you're thinking about buying and want to know when the most homes will come on the market in the town that you're interested in, we go there. Again, I'll show you some of this. Price to volume comparison, town analysis. If you want to get some of the information in one place, I never typically go there, but I know a lot of folks do. Past sales, new construction, current inventory. Let's do something, for instance, let's go into past sales and let's have a look. This one will show you, select a town and you can see all of the towns that are in there. Let's, for instance, look at Burlington. I'm going to select a property type, single family, a time range, let's do the last 6 months, and let's select a price range. Let's look at the 600 to 800K price range. Now, before you've even set foot in the town, you can learn an awful lot about this town by looking at this data. Now, this shows you the blue house icons show you homes that are sold. The greens are where they're under agreement. Now, let's say I want to see more about this one. This is 23 Daniel. Asking price was 700, sold for 757, 108% sale price to list price ratio. You can find information about the home there. And that's great. Sure, you can, expand out if you're looking for a specific home, a specific area. But this is more important, I think.
You picked a sweet spot here. There's so many of them for 6 months.
Yeah, I know. but let's say you don't know whether there's competing offers happen in Burlington. Here's the data. So here, let's go with, this is list price, this is sold price, this is all of the different metrics there. But this came on for 600, sold for 587, not competing offers. 524 to 600, competition. 569 to 600, competition. 554 to 600, competition. 619 to 605. No, I was about to say competition, not competition.
92 days on the market.
Yep. 599
Overpriced.
to 617, competition. Same price. So before you even set foot in the town, you're starting to get a picture there. Now let's look at a different town. Let's go and have a look at, why don't we look at Boxborough and see what we get in Boxborough.
There's all price ranges there.
Let's do 600 to 800. So let's see.
Not very many.
Not as many homes sold, but then you can do that. But here we go, 580 to 625, competition, 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 competition. Now let's look at a poorer school district town. Let's do Stowe or Maynard. Let's do Maynard, see what Maynard does. Not too many homes. Came on at 649, no competition. 618, no competition. 575, there's competition there. 569, competition there. 599, 650, competition, competition. But there's other metrics to look at when you're comparing towns. This is just showing where you can go and get the historic info. If I go back and I'm talking to someone who's coming from out of state, Let's say they're looking in the 600K price range. We go into the sales price distribution, and let's pick a town. They might be interested in Winchester, and let's go and see how many 600K homes would sell in that in that town. Before they even set foot in the state, they can tell Winchester's probably not going to work for them, because the sale price distribution has the $1 to $1.5 million price range, the biggest, and then the 1.5 to 2. If they're looking at 600, only 14 homes sold in that town in the last 12 months. Might be a bit tough. So again, in that, okay, let's say they want a good school system town. Let's see what Acton looks like, the distribution here. Now you look at 600. Yeah, they can find a house in Acton because there's a whole lot of homes in Acton that will meet their needs. So now Acton's starting to look positive. Now let's look at what are the average home prices. So we can go into look at Arlington. We just showed you this information, but I'll show you how we compare, or when we're talking about what's going on in a town. You can see the dramatic, and this is not just a decade, this is back to 2001. You can see there's it's on its way. Now, if we did the same thing to Acton sort of hasn't really had that, it's still sort of bubbling along. It's the highest price was in 2005, the average. Then it's been 11 years before it got back to that price, and it's only just heading up there. So maybe from the perspective of appreciation, maybe that's not great. And that's partly a factor of the commute distance from Boston. So you can compare towns purely and simply on the data and comparison of what we have. And now when we look at inventory levels, again, you can see a whole lot of different towns in here where you can see, well, what's happened in Watertown. Inventory, it's still in that low part. Let's see, we looked at Maynard a minute ago. Let's see what Maynard is doing. Yeah, not much going on. But look at how long it was sort of suffering from the demand perspective and supply. Let's go and have a look at, I always like showing people the sale price to list price ratio. I know I'm sort of going on too long here. But if we go and look at, which one will we go and look at? Let's go and look at Malden. This is quite surprising. Malden, we actually bought a home on the market in Malden last year, and we were mobbed. We had something like 125 private showings between bringing the home on the market on the Thursday and reviewing offers on the Tuesday. And when you look at this graph, you'll see why, because this is showing, see this 100 here, this is the sale price to list price ratio. These blue bars are how many homes are closing in that period of time. And remember the 6 to 8 weeks potential delay, but look at how many times the average sale price to list price ratio was over 100%. That's dramatic. Let's see a town that's a little bit further out. And we'll look at Malden. Yeah, it's sort of
Maynard.
bubbling. Oh, sorry, Maynard. It's bubbling around, not really as consistent as Malden's information. But what you're getting from here is, I hope, that there's a whole lot of information in here that you can use to help you decide. So if we were going to look at Arlington, someone wants to buy in Arlington, when do the most homes come on the market? And we want a single family home, and let's look at listed. This is in the last 12 months. Well, I'm probably better off waiting until May and June because that's when the most homes come on the market. And last year, we had a lot of homes coming on in fall as well.
Be cautious with that graph though, because
For the last 12 months, yes.
right, January through April,
Yeah.
and certainly February through April, you can see the effect of COVID. If that had not been a COVID year, what you would have seen, it would have been a much more gradual rise from January through to May.
Yes.
From the second half of the year, looks very similar. If you remember back to the cumulative graph, it's very similar. But be cautious looking at January through April, maybe even May, because that really you do see the impact of COVID specifically in say in single family in this case.
And hopefully we won't have COVID again, so you can start using this. So I think I've given people a little bit of an insight as to where you can go and get more information if you want more information about other towns. So let's take it back to the presentation. Predictions.
Said you're going to talk. You can talk.
No, I finished.
Well, that was it. Oh. I've got to do the talking on the predictions.
Yes,
so,
you do.
It's January the 19th, so we're pretty brave to give predictions, but I think it's pretty clear if you look at 19, 20, and now 21. There was that slight softening in the markets in end of 18, 19, and it largely continued with a little bit of an anomaly in the condominium market through to 2020. And if the market can be almost unaffected by COVID, then a safe prediction is that 2021 is going to look very similar to what we saw in the last 2 years. We still will have the economic uncertainty, if you like. There's still a lot to play out in terms of the economy. But overall, Arlington's going to see a consistent year, at least a year that is consistent to what we saw in 2019 and 2020, 3, perhaps even 5% appreciation, that kind of number in terms of the market. The condo market, it will be interesting to see if it gets back to normal, if you will, and I suspect it will. We will begin not to have that kind of push of condominiums coming on in the latter part of the year. Certainly, as the vaccine kicks in, as people become more comfortable being in that shared space, I think it's fair that the condo market will get back to normal, is what it basically comes down to. So I think if I put my hat on for 2021, very similar to what we saw in terms of the housing market, to what we saw in 19 and in 2020. Nothing dramatic. It really will take a large number of new homes to come on the market over and above what we saw this year for the market to be disrupted in any way. And I'm not sure why we'll see that. We have seen that in other towns as we look at the data, but we're just not seeing that in Arlington. We're just not seeing that large increase in the number of single family homes coming on the market, and that it's really that's what would drive the market, and we're just not seeing that. So I think overall, similar picture to what we saw.
Which is a good thing. I mean, more of the same. I mean, if you're a home buyer, what your experience is going to be what it is in 2021. If you're a home seller, you're going to experience the same thing as 2020. So it's there's no major unknown.
No, there's not. I mean, as we were saying before, the market in Arlington driven by first-time home buyers and downsizers, and the demographics of an increasing number of first-time home buyers has a few years to play out. We'll get the census data this year, hopefully, and it will get a better picture of this. But it looks like if you look at the last data we got, which was for 15, that the millennials, if you will, we still have a few years of a large number of millennials to play out.
Yeah.
We still have the same, of course, with the baby boomers who are downsizers. We have a few more years of that to play out. So the demographics tell us that Arlington will still very much be in demand because of the large number of those two age brackets, if you will. Looking at Arlington's a great destination either to downsize to or to look at a first-time home buyer into. So overall, I have a positive outlook for 2021 for Arlington, just because I say the demographics, how well it survived, if you will, between how well it went forward in 2020. So yeah, positive picture.
Cool. And we are just about finished. What are our stats? Do we know what we're talking about? That's a key thing. Do we know what we're talking about? Yes. So we listed 65 homes in 2020. We helped people buy 49 homes. Our average sale price to list price ratio was 103%. Now, don't forget that's 103% on 65 homes. So that's sort of major. And average days on the market is 28. There were quite a few homes over the COVID, the April timeframe and things. COVID messed our average days on the market up, but we still did 103% sale price to list price ratio on 65 homes. But in all, what's 65 and 49? That's 114. So yeah, I think that's fair to say we know what we're talking about. I guess. So, and why we do this is we think that our clients deserve to be the smartest people at the closing table, and that we all benefit by becoming smarter about home buying and selling. So that's one of the reasons that we do this. We think it's really, really important for folks to know this sort of stuff. So anyway, thank you for joining us. And if you've got any questions, please don't hesitate to reach out, and look out for the market review booklet in your mailboxes if you live in Arlington. If you don't live in Arlington, then
you have to talk to us. Email us and we'll send you a copy.
Well, and what we'll do is we'll send you a copy, a link to this recording of the blog post on a blog post, so that you can review it again and sort of think, why did they say that? So anyway, it was lovely to see you all. Bye.
Bye.